Today on Forbes, Indonesia's Kopi Kenangan aims to be the largest coffee chain in Southeast Asia. Entrepreneur Edward Tirtanata, who has found a sweet spot in Indonesia's competitive coffee selling business, aims to sharply expand in coming years. The co-founder and group CEO of Southeast Asia's first food and beverage unicorn, Kopi Kenangan, says the unlisted firm is Indonesia's largest coffee chain, now selling nearly 6 million cups a month. Revenue in 2023 was $106 million, and Tirtanata expects it to increase 32% this year to $140 million, and to quadruple to $430 million by 2028. That's just one of his ambitious goals. He aims to go to more countries. At present, the only overseas outlets are in Singapore and Malaysia, and he wants 3,000 sales points by 2028, compared with nearly 1,000 now. Tirtanata also aims to get at least $100 million in pre-IPO funding by 2028, and then get listed by 2029. The company, Kopi Kenangan, aims to open in more countries, with both fully owned stores and franchises under the name Kenangan Coffee. It's partnering with Friendly Group of companies as franchise holder in the Philippines to open stores there starting in October. Early next year, the chain plans to have fully owned stores in India. Tirtanata, who is 35 years old, told Forbes Asia, quote, "It is the time for us to run again, to become the #1 coffee chain in Southeast Asia." Kopi Kenangan means, quote, "coffee memories," and the chain has established brand equity with that name. According to a survey this year by YouGov, a British market research firm, Kopi Kenangan was the top-of-mind coffee chain in Indonesia, ahead of Janji Jiwa, Starbucks, and J.Co Donuts and Coffee. A key to success has been how Kenangan prices its wares. The best seller, Kopi Kenangan Mantan, a palm sugar latte, is 22,000 Indonesian rupiah, approximately $1.40. That's midway between the 40,000 rupiah that some cafes charge for a premium coffee and the 5,000 rupiah for a street vendor's cup made with lower quality beans. Helping Kenangan keep rent costs down is how 80% of outlets in Indonesia are grab and go, and there isn't seating. Tirtanata says he intends to eventually have a 50-50 balance of cafes and grab-and-go stores. Tirtanata, the oldest of 3 children, showed an entrepreneurial spirit during high school, selling old Pokemon cards and Ragnarok bots. He moved to the US in 2007 to study finance and accounting at Boston's Northeastern University. After his parents said they had financial difficulties, he scaled up his class load and graduated in 2.5 years. He later started talking with high school friend James Pernanto about opening a grab-and-go coffee chain that would have more scope for expansion. Tirtanata felt it didn't make sense for most Indonesians to consume expensive coffee every day, as the cost would be equivalent to 1/3 of Jakarta's minimum wage. But prospects could be good for offering, quote, "something that is affordable for people to actually drink every day." In 2017, Tirtanata, Pernanto, and Cynthia Sharunisa co-founded Bumi Berkaboga, the operator of Kopi Kenangan, with an investment of 150 million rupiah. Pernanto, an alumnus of the Forbes 30 Under 30 class of 2019, is Chief Business Development Officer, and Sharunisa is Chief Marketing Officer. In its first year, Kopi Kenangan had 1 store. To expand, the company in 2018 raised $8 million in seed funding from Indonesia-based venture capital firm Alpha JWC Ventures, which later exited with an internal rate of return of 150%. From inception through 2021, the company raised over $230 million through multiple funding rounds from investors including Peak 15 Partners, formerly Sequoia India and Southeast Asia, Jay-Z's venture capital firm Arrive, Serena Williams' Serena Ventures, Singapore's GIC, Li Ka-shing's Horizons Ventures, and Eduardo Saverin's B Capital. The latest funding round, in December 2021, made it the first food and beverage unicorn startup in Southeast Asia. For full coverage, check out Gloria Jarreto's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.